Look at your screen. $60 million. Gone. Sucked right out of the financial markets and deposited directly into a private bank account in the span of exactly 20 minutes. How does a person make that kind of life-changing money while you are stuck in morning traffic? Let's rewind the tape to earlier this week. The president hopped onto Truth Social and fired off an announcement claiming that there had been highly productive talks with Iran. He announced a deliberate effort to de-escalate the military situation in the Middle East. For anyone watching the global supply chain, this meant one very specific thing. The shipping lanes in the Strait of Hormuz were going to loosen up. And when shipping lanes loosen up, the price of crude oil drops, and the broader financial markets breathe a massive sigh of relief. But let's completely ignore whether these so-called productive talks actually happened in reality or if they were just pure political theater. That doesn't matter. What matters is what happened inside the trading terminals exactly 16 minutes before that post went live. 16 minutes before the world found out about this market-moving news, there was an absolute explosion of futures trading. Someone sitting behind a desk, armed with hundreds of millions of dollars in notional value, slammed the buy and sell buttons with terrifying precision. They knew exactly what the president was going to say before he typed the first letter. They knew the script, and they played it perfectly. This mystery speculator walked away with up to $60 million before your coffee even finished brewing. If you turn on your television today, the guys wearing $3,000 suits on the major financial networks will look you dead in the eye and tell you the market is a fair game. They will preach about the virtues of diversifying your portfolio. They will tell you to buy low-cost index funds, hold them for 30 years, and be grateful for your average annual returns. But they will completely ignore the blatant, undeniable cheating happening right in front of your face. Insider trading isn't a shock in Washington anymore. It has become the absolute baseline expectation. Everyone from the highest-ranking elected officials all the way down to metal level. And the most depressing part? You are probably numb to it. The media barely reports on it anymore because the corruption has become so painfully normalized. They are cheating. It is bordering on outright treason, and absolutely nothing is going to happen to them. But what makes this specific $60 million oil trade so infuriating is how wildly brazen it was. If you are going to commit insider trading, the standard playbook is to spread your bets out over a few weeks to avoid raising red flags. But whoever pulled this off didn't even have the basic decency to hide their tracks. They dumped hundreds of millions of dollars into the market in a 60-second window, exactly 15 minutes before the announcement. They are looking right at you and flipping you off with their trading volume. But to understand why this rigged game keeps happening, you have to look past this single oil trade and look directly at Wall Street's calendar. Because once you see the pattern they use to manipulate the news cycle, you will never be able to unsee it. Pay close attention to every major announcement that moves your retirement account. On Friday, May 23rd, the White House announced a brutal 50% tariff on European Union goods. But they didn't announce it during the day. They waited until the markets had completely closed for the weekend, sending blind panic into a frozen system. Then, miraculously, on Monday, May 25th, right as the opening bell rang, they suddenly softened their language and delayed the tariffs, causing the markets to instantly rocket upwards. Do you think that was a coincidence? Let's keep looking at the dates. The indefinite suspension of tariffs on Mexico. Announced on a Monday morning. A massive new 100% tariff on Chinese goods, quietly dumped on a Friday night. The military strikes on Iran, initiated late on a Friday night. The military operation in Venezuela, rolled out late Friday night or early Saturday morning, depending on what time zone you live in. And of course, the massive market rally this week, driven by the so-called de-escalation of the situation that they originally started on a Friday. These are just the examples from the last 12 months. The pattern is so obvious, it is almost insulting. They drop the good news on Monday mornings right before the markets open, and they bury the bad news at the end of the week after the trading desks have already gone home. Decades ago, before the 24-hour news cycle, politicians dumped bad news on Friday afternoons just because reporters had already submitted their articles for the weekend papers. It was just a public relations trick. But today, the stock market is a live, ticking scoreboard measuring their political competence. The incentives have completely shifted. They aren't timing the news to protect their reputations anymore. They are timing the news to protect their portfolios. Every single one of those major announcements I just listed came with highly suspicious, perfectly timed trades placed right before the microphones were turned on. So the guys walking the halls of Congress are just once-in-a-generation investing geniuses, right? Wrong. And that brings us to the real elephant in the room: congressional committees. If you take the time to dig through the mandatory Stock Act disclosures, which they have intentionally designed to look like a broken website from the 1990s with low-resolution graphics, just to make it as painful as possible for you to read, we'll find something hilarious. The average politician is actually a terrible trader. Most representatives and senators just buy stocks, hold them, and occasionally make a boring trade here and there, just like any other wealthy professional. In fact, nearly 2/3 of them actually failed to beat the S&P 500. The median number of trades made by a member of Congress in a year was just 3. So how on earth did Congress as a whole manage to beat the market by over 20% in a year when the market was already surging? Because there is a tiny, exclusive club of extremely active traders inside the government who are making absolute bank and violently dragging the average up. Together, they are executing over 10,000 trades a year, and the profits are almost entirely concentrated in the hands of the most senior politicians who sit on the most powerful committees. When a politician gets promoted to a leadership role or gets a seat on a special committee, their investment returns suddenly skyrocket to outpace their peers by a staggering 47 percentage points. In the world of finance, a 47% outperformance isn't just luck. It is a mathematical impossibility unless you have the answer key to the test. This is exactly how Nancy Pelosi can sit in a room, shape the massive subsidies in the CHIPS Act, and simultaneously execute trades on NVIDIA. This is how Tommy Tuberville can sit on the Agricultural Committee, knowing exactly what crop regulations are coming down the pipeline, and dabble in corn futures. In 2025, almost every single one of these insiders absolutely crushed the market. The only ones who somehow managed to lose money were Chip Roy, who got completely hammered on a single energy stock and is now ironically fighting to ban congressional trading, and Mitch McConnell, who managed to lose 1.8% of his money. Aside from them, the people at the top of the food chain are treating the stock exchange like their own personal ATM. But here is where it gets truly ugly. Because if you think this is just a handful of greedy politicians making a quick buck, you are completely missing the new tools they are using to cover their tracks. In the past, if you had highly classified, privileged information, it was actually quite difficult to turn that knowledge into cold, hard cash on the traditional stock market without leaving a massive paper trail. But the game has evolved. Enter the new bet on everything markets. Utilizing cryptocurrencies, these offshore and decentralized platforms have created the perfect darkroom. They make it incredibly easy for the people who are important enough to be handed classified information, but not quite powerful enough to be completely above the law, to place massive, untraceable bets on geopolitical events. And you have to look at the environment they are operating in. Washington is currently generating more market-moving noise than at any point in human history. Government spending now makes up a higher percentage of our total economic output than it did during the absolute height of the Second World War. We have normalized pure insanity, colossal stimulus checks, tweets that alter global trade deals in an instant, and Federal Reserve policy meetings that attract hundreds of thousands of live viewers hanging on to every single syllable. Financial performance is no longer about how well a company builds a product. It is entirely tied to whatever decision a politician makes behind closed doors. Don't just take my word for it. A massive study published by the International Review of Economics and Finance proved this with cold, hard data. They found that financial instability across the entire market spikes significantly higher. The second Congress goes into session. Why? Because the data proves that is exactly when these politicians are executing the vast majority of their trades. They walk into the Capitol building, log into their brokerage accounts, and the entire market starts violently shaking. And I know exactly what you're thinking. I don't care. Let them make their millions. I just work a 9 to 5. I barely have any money in the stock market anyway, so this doesn't actually affect my life. But before you close this video, you need to understand the fatal mistake you are making. You need to understand exactly who is funding their winning lottery tickets. If you just look at the raw numbers, Congress legally discloses about $1 billion worth of trading volume in a single year. Now, $1 billion is an insane amount of money for a couple hundred random government employees to be throwing around, but in the grand scheme of the global markets, it isn't enough to instantly tank your 401k by itself. The true cost of this corruption isn't the money they extract from the stock market. The true cost is how these massive financial incentives completely distort the laws you are forced to live under. Ask yourself a very basic question. If a politician sitting on the agricultural committee just heavily shorted corn futures, are they going to vote for a policy that helps struggling farmers, or are they going to vote for a policy that crushes the crops and makes them filthy rich? If a lawmaker owns millions of dollars in Nvidia stock, and the artificial intelligence industry suddenly faces a massive crisis, do you think they are going to let the free market handle it, or do you think they are going to take your tax dollars and instantly bail out the AI companies to protect their own wealth? And when someone can make $60 million betting on oil futures, is it really worth it for them to actually negotiate lasting peace in the Middle East? Or is it much more profitable to keep the geopolitical channels constantly on the brink of war? This blatant, self-serving behavior is tearing apart the foundation of our country. And you are the one paying the final bill. Because of these games, the Economic Uncertainty Index for the United States is now sitting higher than it has been at any point outside of the global pandemic. The rest of the world is looking at our government, realizing it is run by a cartel of day traders, and deciding that lending money to America is becoming a massive risk. And when lending to America becomes a risk, our government has to offer much higher interest rates just to convince foreign buyers to purchase our debt. Just think about what that means. Because of this added risk premium, the interest repayments on our national debt have more than doubled in just the last 5 years alone. We are bleeding cash just to pay the interest on the money we borrowed. And where does the government get the money to pay that interest? They take it from you. You are going to pay for their $60 million oil trades through higher taxes taken directly out of your paycheck. You are going to pay for it through brutal, unrelenting inflation every single time you walk into a grocery store or pull up to a gas pump. And if the math finally breaks, you are going to pay for it through a good, old-fashioned economic default that wipes out whatever savings you have left. Is insider trading the absolute only reason our national debt is exploding? Of course not, but it guarantees that the people in charge have a direct personal financial incentive to never fix the system. The guys at the top are playing with marked cards, and they want you to stay asleep. Keep your eyes open, protect your money, and I will see you in the next one.